Japanese outbound M&A hit 158 billion US dollars as tariff uncertainty and supply chain shifts reshape Asia's deal-making strategy and valuations. To analyze these regional shifts, we are joined by Hikaru Okada of KPMG. Hikaru, thanks for joining us. So much happening across the world right now, but how are geopolitical pressures and tariff uncertainty reshaping M&A strategy and deal valuations in Asia right now?
It's a lot happening in our region, especially for the countries like Japan, ASEAN countries. Japan in the region is probably the most active country out of all. Japan is quite outbound M&A focused country, and in the number of cross-border M&As out of all countries in our region. You can see which destinations the Japanese investments are going to. Because of the quickly changing geopolitical tensions and pressures, destination has been shifting to North America and ASEAN countries. Japan used to invest a lot of capital into China market. However, that has changed to somehow.
Hikaru, which sectors across Asia Pacific are seeing the most cross-border consolidation activity, and what's driving it?
Yes, if you look at slide 7, the most active sectors in our region is energy, TMT, IM, and financial services, and consumer and retail. Australia and ASEAN countries are the most typical destinations of M&A capital when it comes to acquisitions, mergers, and acquisition. The highest numbers are scattered in these sectors. And it's increasing when it comes to trend.
You mentioned that Southeast Asia, Hikaru, is a part of the Asia-Pacific region seeing the most cross-border consolidation activity. What countries are we seeing this activity pick up, and how are they doing right now?
Indonesia is a quite big country, population of 250 million, and the consumer market is growing. So is the industrial market, and a lot of capital inflow is expected to happen, primarily from Japan and North America, and probably Korea and China to follow.
I want to go back to your first point on Japan, Hikaru. How do you think the Japanese M&A climate will recover over the next 6 months?
Yes, I think capital flow to China might stay on the low end for next 6 months or maybe longer because of the difficulty, uncertainty surrounding the geopolitical factors. Having said that, certain technology or industrial sectors are quite important for Japanese companies when it comes to Chinese market. So we will continue to see the capital flow into China, but it will happen only at the rate somewhat lower than the 2021 or 22 period. And instead, because of the increased tariff in America, that our local provision of services are quite important. Instead of export of the goods or services from Japan or Korea or other countries from our region. So in order to build the capacity in the US, a lot of acquisitions are happening in that space.
And Hikaru, where is the M&A opportunity in Asia that most institutional investors are still underestimating?
I think it's probably sitting when it comes to countries, Japan and Korea. These two countries from a geopolitical point of view, quite Western economy friendly. A lot of capital flow is happening into Japan and Korea. And if you look at the industrial structure and the arrangements in these two countries, a lot of Japanese companies, for example, have a quite strong manufacturing base in Southeast Asia, which is a growing market. So, for example, US or Western European companies can acquire a Japanese company or asset in order to make a footprint in Southeast Asia. So it's a indirect investment if you buy a Japanese company to make a footprint in Southeast Asia. And same applies to Korean companies as well.
Thanks as always for sharing your thoughts, Hikaru.
Thank you so much, Paolo.
Again, that was Hikaru Okada, APAC Region Head of Deal Advisory at KPMG. For more news, visit AsianBusinessReview.com.